Hello! In this video, I would like to explain what happened previous week with GameStop and how this affects the crypto space. GameStop is an American video game retailer with many stores throughout the United States and other countries. This is their website. This company had difficulties which were amplified with the lockdowns, and this was reflected in its stock price. Many hedge funds had opened short positions, betting that the stock would go even lower. For a long time, this bet has been profitable until Wallstreetbets intervened. This is a group of young people new in investments who have their Reddit community in which they exchange ideas on how to invest and exploit various loopholes. One thing they have in common is their despise for the Wall Street and their belief that sharks manipulate stock prices. Another thing they have in common is their ignorance about investments, which often leads them to bad decisions. Do not take them for successful investors earning millions. Most of them are losers. If you want to watch a brief history with their most distinguished achievements, I refer you to this video with title The Absolute Chaos of Wallstreetbets. Someone among them found that the stock of GameStop was overshorted and therefore was a good target for short squeeze. They decided to buy GameStop stocks altogether in order to move up the price and cause losses to the hedge funds that had short positions. Let me explain this with an example. Here I show you how shorting works. Let's assume a hedge fund borrows 1,000 stocks of a company, for example GameStop. Then it sells these stocks for an average price of $10 per stock, for example. So it makes $10,000 profit from this sell. After a period of time, it buys back the same amount of stocks at an average price of, let's say, $1. This buy costs $1,000. In the end, the hedge fund has to return back the stocks to the agent who lent them in first place. At this time, it needs to pay an interest rate to the lender, for example, 5%. Therefore, this costs $500. In total, the hedge fund makes a profit of $8,500. This was the good scenario for the hedge fund, according to which the stock would move down. However, after the Wallstreetbets intervention, the downwards move of the stock stopped, and it surged to unprecedented highs. Let's look what happens when a hedge fund has shorted a stock but the price moves up. Let's assume that it rebuys the stocks when the price has been moved up at $100. This buy costs $100,000, and in total, the hedge fund will make a loss of $90,500. That's what Wallstreetbets achieved. Of course, this is just an example. The numbers are not the real numbers we saw in the GameStop case. One final thing to notice is that each hedge fund that rebuys the stocks moves the price up due to the rapid demand pressure. The next hedge fund that rebuys moves the price even higher, etc., etc. Because there were many hedge funds shorting the GameStop stock, their losses were huge. One of them made a loss above $1 billion and almost got bankrupted. Of course, these guys celebrated their victory on Reddit and Twitter. In the United States, this subject dominated the Wall Street news. However, the most important was that various brokers decided to stop trading in order to mitigate the hedge fund losses. Robinhood was among them. As you can see, they stopped trading of these two stocks, GME being GameStop, the other one being another company Wallstreetbets decided to short squeeze. This move frustrated not only the Wall Street guys, but all the millennial retail investors who use Robinhood to trade stocks. As many have noticed, whenever retail investors lose money to hedge funds, these brokers never intervened to protect them. But once hedge funds lose money to retail investors, the brokers stopped trading to protect them. This is not free market, the game is rigged. This issue later was escalated. Even US senators and House representatives have officially asked Robinhood and other brokers to provide justification for stopping trading. Also, quite a few Robinhood customers filed a class action complaint against Robinhood. The main point is that retail investors' confidence to these brokers has been shaken. And this is the best marketing DeFi could imagine. With the term DeFi, we mean a set of decentralized financial applications running on top of blockchain that offer a wide spectrum of functionalities ranging from an exchange to borrowing and lending services to digitalization of stocks that can later be traded as blockchain assets. We should also notice the imminent response by Bittrex, which is a crypto exchange as well as a service that digitalizes stocks, that announced that it will list every single stock Robinhood stopped trading on. The Wallstreetbets movement had a domino effect. The whole situation is discussed in the higher levels of the US government because the hedge funds who suffered heavy losses by the GameStop short squeeze had to sell other stocks they possessed in order to cover the loss. This resulted in a downwards move of the whole New York Stock Exchange. Some among the Wall Street guys have created a new Reddit community called SatoshiStreetBets, which is the crypto analog of Wallstreetbets. The last days, many new users attempted to create accounts on crypto exchanges that could not cope with the huge influx. The SatoshiStreetBets guys have already started doing their thing with cryptos. Their first move was to pump Dogecoin from less than a cent up to 7 cents. Of course, then Dogecoin received a lot of sell pressure and the price moved down. They executed a similar pump and dump scheme on Tron, which they pumped from 3 cents to more than 4 cents, an increase of more than 30% within an hour, and then it collapsed imminently. I know many of you may be tempted to participate in a pump and dump scheme. However, I want to ring the alarm. Let's examine, for example, what happened with Tron. The pump and dump organizers buy early, here at 3 cents. Then they tell you, let's all buy at the same time at 1 o'clock. You, the naive participants, buy at 1 o'clock at a price higher than 3 cents because you cannot all catch up the price down here. The organizers sell while the price approaches the top, making thereby a good profit. And then you have to sell while the price moves down, most probably at a heavy loss. Pump and dump is a well-known scam in the crypto space. Those profiting are the organizers that have bought from beforehand, as well as a small percentage of simple participants who manage to sell very fast. The vast majority of simple participants suffer heavy losses. That's why I suggest you to not participate. It is not worth the effort and the risk. Don't be greedy. We are on a bull run in a very good year for cryptocurrencies. We all have plenty of opportunities to make significant profits by normal means. Now, for tomorrow, Monday, rumor has it they are preparing a pump and dump scheme for XRP. In this anticipation, XRP has already moved up. What our Wallstreetbets friends do not know is that Ripple, the company behind XRP, sells huge XRP quantities every time XRP rises. Thereby the price immediately drops. To mention exact numbers, Ripple as a company has sold so far XRP worth of $1.4 billion, while two of Ripple's co-founders as individuals, one is Larsen with his wife, has sold XRP worth more than $450 million, while the other one, Garlinghouse, has sold XRP worth of $150 million. Other Ripple executives have sold smaller amounts, but let's leave them aside. These guys anticipate the gift. Wallstreetbet guys are going to hand them over tomorrow. Now, if somebody manages to make profit from pump and dump, I congratulate him. No profit is the same, even if it is achieved on coins like Dogecoin and XRP. However, most are going to lose money. That's how all pump and dump schemes end. To conclude, I believe it's good all these new people are entering the crypto space. In the beginning, they might do their nonsense with Dogecoin and XRP, but eventually many of them are going to take cryptos more seriously. They are going to read, understand, and invest in a legit project, thereby benefiting the whole crypto space. The DeFi projects, however, seem to have imminently benefit as most DeFi coins have surged, especially after centralized brokers like Robinhood decided to stop trading off the critical stocks. That's all for today. If you found this video useful, please hit the like button, subscribe, and hit the notification button to not miss any of my next videos. See you soon.